Hi everyone, welcome to another video. In this video, we're going to talk about your gross margins as an e-commerce store owner. Right, it's definitely not the sexiest video, but it's definitely one of the most important ones because without really understanding your gross margins, you're not necessarily going to know what kind of profit you're making and how you can actually go about scaling your store profitably. If you're not measuring your margins, you might actually be running backwards without even knowing it. Most business owners really just operate their business based on the money in their bank account, and that's the worst way to really go about growing your business or even running your business. So with that said, this video is going to unpack all the different types of margins that you need to be aware of and how to monitor them, and I'm going to give you some averages for the industry that you can track and essentially hopefully aim for when it comes to growing your business profitably. Right, so first of all, we need to understand that there are three different types of margins and profit margins that you need to be aware of. So the very first one is called your gross profit, or GP. Right, so your GP, guys, is literally the most important thing when it comes to identifying the type of product that you want to sell, because it is the best identifier whether the product that you're selling is actually going to help you make profit. It's also the first type of profit that you make back after someone has bought something from you. So in essence, the gross profit is the total revenue you've made from a specific product versus what it's cost you to buy that product so that you can resell it to someone else. And I'm just going to quickly share an example with you on my iPad so you can get a better understanding of what I'm actually saying. Right, so this is our GP, and our GP is obviously now, as you know, our gross profit, and our recommended retail price would be, for example, 1,000 Rand. So if we are selling a pair of jeans for 1,000 Rand, that's the recommended retail price. And if someone buys it from us, we get 1,000 Rand back into the business. That's really, really exciting. Then our cost of goods sold is what actually the price of the jeans were when we bought it from the supplier so that we can resell it to sell it to the market. And for argument's sake, say if the actual price of the jeans were $500 and we had to resell it for 1,000 Rand, then our average GP equals 50%. Right, so to conclude, if you are buying a pair of jeans for $500 and you're reselling it for 1,000 Rand, then you technically have a gross profit of 50%, which is really, really good because the average store internationally, of e-commerce stores worldwide are sitting with an average gross profit about 42.5%. That's roughly where the average gross profit is currently for most e-commerce stores. And if your gross profit is not in that area, then you're obviously a little bit behind. And it's something that you can work on in different ways. Like you can negotiate better deals with suppliers, the more you buy in bulk, etc., etc. So the smaller you are as a business, the odds are that you're probably making less GP on a product because you have to pay more for that product because you can't negotiate in terms of buying in bulk and getting better pricing from the actual supplier. So the average gross profit that you make on a product is probably not in that range. But if it's anything above 30, then you really have a good product that is really got the potential to help you make profit as a business. So now that we've spoken about gross profit, the next type of profit that you need to understand is your operating profit or your operating margin. And again, just moving over to my iPad so you can have a look. So here we have our operating profit. And what that comes down to at the end of the day is the total amount of revenue that we've made, and this could be for a month or a year, whatever it is. So let's, for argument's sake, say that we've made 1 million Rand. Then we need to look at the cost of goods sold. So how much did we actually pay our suppliers during the specific time frame? And it might be something like 500,000 Rand. So we have made 1 million Rand in sales, but 500,000 Rand of that was spent buying the product that we obviously wanted to resell. Now, that is technically your GP. But what makes this different is that we also need to take into consideration our operating expenses. So operating expenses could be software, your warehousing, your staff, your advertising, all that type of stuff needs to be considered as your operating expenses. It's everything that you are paying that helps you operate the business successfully, right? And that could, for argument's sake, say be around, easily 400,000 Rand for the same period of time. And now what we're going to get is we're going to get a GP. So this is 1 million Rand. 500K was dedicated to buying product. 400K was dedicated to helping us, run the business, which means we really have 900k expenses in total if we look at it. So we're making about 100k profit. So we're sitting with an operating margin of 10%. So that is really our operating margin after our cost of goods that we've paid for and operating the business. Cool. So that's GP and operating profit. Then the last thing, that's obviously the most important one, is your net profit, right? The money that you actually take to the bank, the money that you can actually use for yourself, for your family, and the money that you can actually, spend knowing that, it's profit that you've made. And that is what we call our net profit. All right. So net profit is technically all the above. So we've made 100k profit, and we're going to pay roughly, between 20 to 30% tax on that, depending on, your business and how it's registered and et cetera, et cetera. That would mean that we are going to pay, we're going to pay 30,000 Rand. That means that 30% of 100k is 30k tax. So that is 30k equals tax. So technically your expenses are then this 900k. So it's the 500 there and the 400 in OPEX plus the 30k in tax. That is all your expenses. Revenue equals 1 million. The difference is, so net profit equals 70k, and that works down to a 7% net margin. Net margin. So you have a 7% net margin. And if you're sitting around that mark, it's really good, because the average net margin across the board for most e-commerce stores is roughly around 4.95%. So if you have 4.95% left in the bank after generating the revenue, then that is your net profit. And then you are doing really well, because that's the average for most e-commerce stores. If you're doing less than that, it's something that you can obviously pay attention to and see how you can improvise, and how can you lower your CPA, how can you negotiate better deals with your suppliers, and all these different things. And hopefully you can start tracking your net profit accordingly and start scaling more profitably as well. So there you have it. The three different profits at the end of the day is your gross profit, your operating profit, and your net profit. Just to conclude, your gross profit is really just the difference between the revenue of the product that you sold and the cost of that product that you had to buy in order to resell it for. And that is the first indicator of whether you actually are going to make actual profit, net profit at the end of the day, because if that percentage is already very low, you still need to include the expenses of running the business. So that is obviously just going to diminish even further. So if you're not already sitting with a 30% profit margin roughly, things can get really tight for you as a business down the line. And that's why it's so important to keep an eye on your margins so that you can start growing your business profitably as a business owner. Now, I hope this video helped in any way, shape, or form. Let me know if it did. I hope that you guys found value in this. From my side, that's all I wanted to share with you. All the best. I'll see you guys next time.